Good day everybody. On this video we're going to be learning market structure. I've taught market structure on my previous video, but I still want to teach market structure because it's very vital in the market for you to know the structure of the market. So how do we know the structure of the market? That still boils down to our support and resistance. Okay, so let's start. Let's do something. Look at this market now. For instance, this is the live market, and we have known that this is an upward trend. The market just started going up by inserting our moving average 7 or 5 or rather 20. Now let me just leave it like this. Then now look at the structure of the market. Look, the market, there was a rejection at this point, and the market started forming something here they called resistance, and what is supporting it. Look at the strong support level here. So I'm expecting what the market to do what here, to solo down to this support level, then go higher again. Are you seeing it? Now you don't trade like a novice. Let me remove this moving average so you get a clearer view of it. Sorry. Okay, this is it. Now I'm going to click on my screen. I'm going to click here, the shape here, so I can use my trend line. Then I'm going to click on this trend line here. Once I click on it, I'm going to click my screen and drag. Are you seeing this? After dragging, I'm going to tap on the line to remove the editing points. Then I'm going to click on it again, do the same thing again because I want to insert two lines. Then I'm going to do the same thing here. Okay, now I have a straight lines. Okay, tap, done. Okay, watch. Now I'm expecting this market to get to this point. I'm expecting this market, where's my drawing to? I'm expecting this market to get to this point. Then what afterward, what happened? If the market did not break this line or break this line, then we will see a reversal. The market will reverse up and go back up. Okay, so the market will come down, then go back up higher. They call it higher high. Okay, so the market will not exceed this level. If at all it exceeds this level, that means it's a breakout. So we'll start seeing another trend here. I don't know if you understand. I made this level. So this point, there's a point here which the market will touch, which is this trend, this normal support level. This support level. If the market should break that support level, you will not see the market forming something like this. Okay, coming down again. So and then we'll be looking for M. We'll be looking for M to confirm that it's coming down. It's a downward trend. We'll be looking for M to confirm that it's a downward trend. But for now, the market will have to sell. It will sell down to this point and touch this line here. After touching this red line, we should be expecting a reversal, which is called spike. Because if you go to your 1 minute chart, you see all these long candles, this long green candles. They are called spike. They are all called spike. So sorry. So let's go back to H1, which is 1 hour. So the time frame I'm using to do this, using to set up this structure is 1 hour. So we have gotten the structure of this current market now on Boom 1000. This is the structure of Boom 1000 currently now. So you can trade on the structure. It's fine. You can follow up. You will make money. It's very easy. It's very easy. Let's check another market. Let's check. Okay, these are currencies. Let me quickly do this. Let me add crash index. Okay, let's check Boom 1000. Look at the structure of Boom 1000. It's very easy. Okay, I'm going to tap on my screen, click on the trend line, then I'm going to click and draw. Okay, I got it. I'm going to click and draw. Alright, now I've done support level. Then I'm going to click and draw the resistance level. Sorry. Now if you see this now, it's almost forming something we call triangle in the market. It's forming triangle in the market. So now the market is revolving. It's revolving. The market is revolving, but it's getting smaller. It's getting smaller. Now the market will get smaller until we see a breakout. Now I'm expecting the market to go like this, after like this, like this, like this. Either it breaks out down and start coming down, or it breaks up and start going up. Okay, there must be a breakout. Okay, this one is the first breakout. This one is the first breakout. So I'm expecting the market to go back up, touch here, retest, come back, then start coming down or start going up. So with this now, you know that around this region, you don't need to trade with all hopes that the market must be going only up, up, up. You know that we are expecting a breakout, because the market have gotten to the tip of where there is something called indecision in the market. Actually, we normally use a candlestick to decide. They call it doji. I will teach about candlestick later. Okay, so that is the structure of this market currently now. So let's check another market. Let's check crash 1000. Let's see what crash 1000 is doing. Let's quickly draw the structure for crash 1000. Okay, look at crash 1000. We are getting a consolidation in the market now. Okay, look at what crash it did. Watch. The market went like this, form a structure, upward trend. Then after the upward trend, we started seeing something like this. Watch. The market revolves around this box. So I call this one a fake breakout. This is not a breakout. So in the market, yeah, I'll consider this here resistance, I'll consider here support. But let me draw it properly. Horizontal line. I'll do this. I'm gonna put horizontal line again. I'm gonna do this. Now let me show you the line I'm using. Look at the line I'm using. This is the one I'm clicking. Okay, so let me go back. Now the reason you say, okay, why didn't I put the line here? I will tell you the reason why I didn't put the line there. Now check here. Look at this point here. Look at this point here. Are you not seeing that anytime the market reaches that point, there is always a reversal or there is a price rejection at that point? So as far you've seen 3 price rejection at a particular point, you take that point to be a support level or a resistance level. So look at this point here. There is a price rejection here. There's a price rejection here. There are price rejection here. There's also a price rejection here. So we have almost more than 5 price rejection at that top there. So that resistance, I take that place as a resistance, strong resistance level. So the market will be revolving around that point for a while. So the market, I'm expecting the market to come down. The market is doing something up, down, up, down, up, down, up, like that. That is how the market will be going until we see what a breakout, or a downward breakout, or an upward breakout. So it's as easy as this. It's very, very simple. If you can identify these things in the market, you'll be eating this market like no man's business. Okay, now look at what the market is doing. The market came down. What happened? The market went up. What happened in it? We'll see a double top, which is what? MO. So I consider this to be an MO. Watch. Look. M. Down. So the market is going to come down to this point, then goes back up. It's very, very clear and simple. So if you check now, the market is spiking down. Look, are you seeing it? There's a short spike now recently. So I'm expecting another spike. The market is going to come down. It's going to come down. So thank you for watching this short video. So if there's any question, just ask me on WhatsApp, I'll explain. Okay, it's your boy Sonny. My WhatsApp number is on the screen. Just check below. Look at my WhatsApp number. It's always here around this point here. Just check here, you see it there. So thank you for watching this short market structure video.